So what's he doing now? Let's bring in Keith Fitz-Gerald, principal at the Fitz-Gerald Group. Great to see you, Keith. What about the criticism from those who say, he's always buying?
Well, that's a fair statement, but you know what? The markets have an upside bias over time. So the question is not buy and hope. The question is buy and manage. And you can do that very intelligently when there's a big sell-off and emotions are running high.
What were you buying then, and what would you do now?
Well, I tell you what, I was buying companies like Apple. I was buying companies like Palantir, NVIDIA in particular, anything that got hit really hard and where sentiment was overwhelmingly negative. And the reason I was doing that was because I had known my history. When the emotions run high, people do the right thing at exactly the wrong time. They sell when it gets low, they buy when it gets high. So you flip that around, you get to work. Today, I'm going to stick to that playbook. We're cresting towards new highs. Some of the best companies are still on the leaderboard.
Yeah, well, the NVIDIA trade, for instance, looks genius, but the Apple one, we're wait and see, I guess. Yeah. Yeah.
Well, fair statement, right? And that comes with the territory. I've been doing this a long time. And, you know, you take your winners when you get them, and you take your losers, and you take your every once in a while, too, because it's a traveling companion. But a company like Apple, you adopt a longer perspective. What Apple's doing right now, all the disappointment I'm seeing is par for the course. I love it because the company is always on the offense when people write it off.
So if you're supposed to be selling when everyone's buying, what does that mean right now? When a guy like Ed Yardeni, again, sort of like a structural bull on stocks, but even he acknowledges that the list of worries is basically gone at this point, and that I know that maybe the data isn't fully on board with this, but anecdotally it feels like people have become much more bullish on the market.
Well, they're bullish, but there's still a lot of money on the sidelines, right? They're not euphoric. They're not getting careless. The FOMO that I'm expecting isn't yet in the mix. When that starts to appear, then, yeah, I'm going to start pruning some of those gains, rebalancing into stocks that want to catch up. But we're not quite there yet, if my read on this is correct.
Let me circle back to Apple, because you do, sort of make your point that you don't mind buying and owning it here, no matter what the performance has been the last couple months, because you liken this more to those moments like 2006, Apple's not a phone company. 2010, nobody needs a tablet. I remember that one particularly well. 2013, services won't move the needle. There's probably even more we could list after that point. What makes you so sure that they're going to figure it out this time around, and that the stock, which is currently trading at 30 times earnings, is still going to have plenty of upside?
Well, there's a couple things that are in this developers conference that I really honed in on that I think are very, very telling. Apple's translation feature, for example, that's not exactly happening with conventional programming. The fact that Tim Cook said we can't do liquid glass until we have the computational power. Now that's here. Apple's MO is never to be first into the fight. Apple's MO is to watch what everybody else does, let them spend all their money, and then come in and redefine the customer experience. I think they're making moves that are consistent with that expectation, just like they did with the iPhone, just like they did with the tablet, just like they did with services. So to me, it's a very attractive buy point, even though we are arguably expensive.
All right, but you're not moving to trim anything in the world of NVIDIA, Palantir, from some of the winners, or from the market more broadly right now?
Not actively, no. I mean, if I get 100% pop, then yeah, I'll use something I call the free trade. I'll take 50% of that off and start buying many times right back into those same names, because doing so helps lower my risk, but still increases the profit potential over time.
All right, Keith, for now, thanks. Appreciate it.
Thank you.
Keith Fitz-Gerald joining us.